G'day guys, welcome back to another Bitcoin update. We have CPI in just under 24 hours from the time this video is released. And so obviously and naturally we need to look into the charts and look into what's most likely in relation to CPI. And by doing that, we're looking at the hourly chart, we're looking at the daily chart, we're looking at the weekly chart. We're looking at that weekly chart breakout we had on the RSI. We also need to look into, and uniquely, I haven't looked into this before, the bearish bat formation, which is a bearish harmonic pattern on the Bitcoin daily chart. That's quite interesting as well, because we have looked into the bullish argument quite a lot. I am of the belief that the Bitcoin bottom is in at this point in time. And I think that if it's not in now, it will be in very shortly. And you know, people debate me on that. They say, what about the S&P 500? And I say that my answer to that is quite simply, if we do break the 4-year cycle, and if we do see Bitcoin putting in new lows into February, yes, I will agree that Bitcoin won't bottom out until 2024. But at this point in time, I have no reason to believe the 4-year cycle won't play out. And so, yes, I do think the bottom is in. But we need to look into a counter argument against that, which I've kind of established in the charts here. And that is an argument that's suggesting a macro fake out. So let's look into that in a second. Before we get into the video, 30% discount on VIP memberships. That is ending in 3 days. We have a sale on currently. Check that out. Pin, comment, and description. If you want to learn how to trade, Crypto Academy courses, all the information is there. Bitget Exchange, sign up using my referral link. Everything's down there in the pin, comment, description, guys. I'd highly suggest you guys check it out, and I'd highly appreciate it. All right, let's get into the video. So CPI is in 24 hours roughly by the time this video gets out. And we've looked at this extensively. The market as of current is expecting a 0.6% decrease in inflation down to 6.5%. So quite obviously with CPI, it's very simple. If it comes in higher than that, if it comes in higher than the market's expectation at 6.5%, that's bearish. If it comes in lower, that's bullish. Okay, so it's quite simple. It's not about the actual number itself. It's about what the number is in relation to what the market expects. So again, 6.5 is the market expectation. Higher than that's bearish, lower than that's bullish, same as that is neutral, and the general trend will continue. Okay, so that's kind of CPI, and that's coming 24 hours away. There's not really much we can say about it. I can make all the predictions I want about CPI. The fact of the matter is the market's expectation of 6.5% is more accurate than any prediction I can ever make. That's why I really don't like the question. People ask me, what do you think inflation's going to be? It's like, mate, I don't know. Look at the market. The market knows more than me. The market is the general consensus of every single metric, every single investor, everything. That is the expectation. Who am I to make a prediction on what inflation is going to be? I don't have the resources to do that. So I'm expecting what the market's expecting, but obviously that's going to be a little bit up for deviation there. So we'll check that out when it comes out in 24 hours. But in relation to what's actually going on the charts right now, you know, Bitcoin doesn't look too bad. It is a little bit iffy, I will say. It's not in the best position you could possibly see. You know, we had a pink bear flag here, as you can see on the screen. We broke that to the downside. We did break back into that bear flag. We did break into an ascending wedge formation. We managed to break that wedge to the upside there in the yellow. And in doing so, we actually broke an RSI triangle to the upside. But as of recent, it hasn't looked particularly hot. There are a few reasons for that. One of the reasons is we have a hidden bearish divergence on the RSI, as you can see here. Apologize for the messy chart, but you guys can just follow my cursor here. We have a hidden bearish divergence on the RSI. At the same time, we haven't seen the volume we would have liked to see during this breakout. In fact, we saw descending volume on yesterday's candle, which isn't very promising. And zooming into the shorter term, we do have an ascending wedge formation here. So yes, technically we are above the wedge, and technically we are within the greater bear flag, and we broke back into that. So it doesn't look too bad naturally. But I'm not going to go ahead and say Bitcoin looks super strong here. I don't think it does. I think honestly Bitcoin looks like it needs to retrace a little bit, and that's just my personal opinion there. As of right now, we do need to hold that 17.1k level. 17.1k is the critical level you need to be watching in the short term. If we lose that level, it's very likely we'll go downwards towards the bottom of this wedge here and at around the the upper 16Ks. And if we lose that, there's not much until the lower 16Ks. So it is quite critical that we hold 17.1K. But you know, at the end of the day, and this is what I say before every CPI, I can do all the analysis I want on the TA charts, I can do all the analysis I want on the wedge, but if the inflation number is dramatic, and if it comes in dramatically higher or dramatically lower, that's going to throw off that TA entirely, and we're going to see a completely different market direction. So that's why I don't think short-term TA is particularly relevant when it comes to this close into CPI, but it is interesting to see Bitcoin showing some weakness here, and it's not surprising. It's not surprising at all, actually, because Bitcoin is getting very close to some critical levels. Some of the critical levels being that yellow downtrending line, that bull market support band, that 200-day SMA in the green here that I'm going to bring up in a second, and that red horizontal resistance box, which is stemming from June, that stems from around 17.7k. So, it's not surprising. Bitcoin is very close to testing major levels. Of course, it's going to show some weakness, especially on the first attempt that it's had in over a month now. So yeah, it's not surprising. But yeah, we do ultimately need to wait for CPI, and that will develop the short term a little bit more. At this point, all I can say is it looks kind of ugly, but I can't really say anything other than that because we haven't seen any breakouts yet, actually. So CPI is very close. And I wanted to talk about another thing really in this video that was kind of pressing and that I thought was pretty interesting. I've talked a lot in the past, in the recent videos, about this RSI breakout on the weekly chart. I've talked a lot about how CPI and the next weekly candle in 4 days will either confirm that RSI breakout on the weekly chart and send Bitcoin upwards, or will label it a fake out. And that still stands, but I think my kind of bias has been leaning a bit more bullish in the last few weeks, and I still stand by that. I still stand by the fact that I should have a bullish bias. I think there is reasonable data to suggest that I should be having a bullish bias here, especially if you discount what's going on in traditional markets. I know a lot of people aren't comfortable doing that, but I personally am, simply due to the fact that it's not that I'm comfortable doing it, it's that I think there is enough data on Bitcoin to say, well, the trend is your friend until it ends. And I think the 4-year cycle is one of those pieces of data. We can quickly skim through that. I know this is recapping information here, but 4-year cycle, very strong macro trend based on 5 separate date range trends. It predicted a bottom in Q4, potentially January. And if we bottom out in January, or if we have already bottomed, that 4-year cycle remains sound, remains solid. So yeah, I do think there is enough data to kind of be a little bit confident here for Bitcoin macro at this point in time. But obviously we haven't seen confirmation yet, and so I'm not buying. I'm not buying at this point in time. I'm waiting for confirmation. And we do need to look at the bearish arguments, right? I want to briefly interrupt this video to talk about the Bitget Exchange. The Bitget Exchange has 5 times lower fees than Binance on futures. It has 0 spot fees for spot trading, meaning you can trade spot for entirely free on every single coin. It has a rewards center. It has a protection fund. It has events regularly run. For example, the FIFA World Cup event it ran recently was in partnership with Messi, the famous football player. There are many, many reasons to sign up using this exchange here, but if you sign up using my exclusive referral link, which you can find a link to in the pinned comment or description, you will get a further 15% decrease on futures fees, and you'll get access to an exclusive reward center in which you can gain access to 4,000 USD in rewards via completing various tasks of various difficulties. Signing up to this exchange using my referral link is by far the best way you can support the channel, and it's the best way you can support yourself as a trader, gaining access to the cheapest exchange on the cryptocurrency market. Now, for my viewers from the United States of America, when you're signing up to the exchange, click on Other as Country of Residence, as you can see I'm doing on the screen now, and you will be able to sign up and use the exchange. Normally, as a non-KYC customer, you'll be treated exactly the same as everyone else in the exchange. So please sign up using my referral link. Thanks for watching the advertisement. Let's get back into the video. Because our confirmation zones, and this is very important to everyone who watches this channel regularly, stick with me here. Our confirmation zones, I've made it very clear, is a break above the yellow line, break above the market support band, break above 200-day SMA. Once we break all of those things, we buy, okay? But now there is a slight problem with this, okay? Because we have a bearish bat formation. Not many people are familiar with what these are, okay? And it is developing. So it's not a confirmed formation yet. It is still developing, but it is an interesting formation. It almost looks like a double bottom, but it's not a double bottom, right? It's a double bottom in which the right-hand side of the double bottom is a little bit higher, and actually that is a bearish thing. Bearish bat formation is based on many different angles of trajectory. They all come together and they form this pattern that looks like a W, but the right-hand side is a little bit higher, and ultimately what generally happens after a bearish bat formation is a downtrend. And as you can see, the target for this bearish bat formation is actually up here at 20.7K, which does make sense because 20.7K is a resistance zone on Bitcoin. You can see multiple times we've bumped heads of 20.7K. I'm circling them now, you can see on the screen. And multiple times it's led to rejections both from the upside and the downside. So it is a little bit concerning to see this bearish bat formation play out, especially considering the fact that we would actually, if we were to follow this formation, we would get above all of our critical breakers. And then we would see a rejection and a reversal from that point, which would leave us in a terrible position holding bags that would be, led into a fake out and led to a renewed drop. So it's a little bit concerning. And for that reason, I will be keeping an eye on it. Now, I don't think it's developed enough to fully consider as something that is completely destined to happen at all. In fact, I would say that it's unlikely at this point, but we will be watching it closely. I think there is enough data on Bitcoin to assume that if we do break that yellow line, we do break that bull market support band, we do break all of those things, that would outweigh this random bearish bat formation we have. But again, it's certainly something we need to look into and keep an eye on. So yeah, we've got Ethereum on the verge of a breakout. We've got total cryptocurrency market cap on the verge of a breakout as well. S&P 500 similarly is also close to a breakout, and CPI will be interesting to see what happens there with that. You know, heaps of interesting things going on with charts, and of course Bitcoin short term is very speculative, and it's kind of heading towards resistance zones that we need to conquer in order to confirm an end to the bear market. So it's a very pressing time in the market, and CPI is going to bring a lot of light. So we're waiting for that 24 hours. Again, just a recap on this video. I do think everything is still in decent order in terms of the longer term. I think the longer term is pretty sound right now. It looks pretty normal. Nothing's really going too badly. I would lean slightly more bullish at this point in time in the long term. Short term, it's a little bit iffy. I will be honest. It doesn't look particularly strong. But again, CPI could toss that up. And anyway, I'll catch you guys in the next one. Thank you.